All right, thank you very much. Yeah, I mean, 13 years, I mean, I'm coming from traditional finance, and of course, 13 years is not very much in traditional finance, but in crypto investing, it's among the three of us, it's pretty good. So we've been around quite some time. I'm the founder, one of the founders at Protos Cryptocurrency Asset Management. And Protos is managing a cryptocurrency token. It's a hedge fund token, fully security, as a full regulated security token. Okay, so yeah, so we completed our ICO in December 2017. Obviously, there was a very long process behind it, since this is a security token, so we had full KYC on all our investors. Then we have started raising our traditional fund. A lot of investors actually wanted to get into crypto, but they didn't like the idea of investing in a token itself. And later this year, we're going to launch the Walter AI platform, which is going to leverage our data-driven investing. So yeah, I mean, I guess everybody here, so the last people that are here still, probably know this chart. It's the total market cap of cryptocurrencies, and obviously a bit outdated, but you know, in that time frame, it was the best strategy to actually buy and hold your cryptocurrencies, even though in 2014 maybe some people didn't told you not to do that. Nowadays, we believe, you know, ICOs are becoming extremely expensive. They're also a token a day, so hundreds of tokens per week. So it's becoming very difficult to analyze them. So I basically want to talk about a little bit how quants analysts like me are using data to invest in cryptocurrencies. So the next one. So is that right? Yeah. So we will launch the Walter AI platform soon in March, probably. And the Walter platform basically summarizes data that we are using for trading. This is an example of Ethereum. So basically, it describes the technical details about a platform. So which consensus mechanism it's using, the hash power, the difficulty levels, and so on. Then we're tracking market indicators, just standard off-the-shelf market cap, trading volumes, supply, price actions, high-low. And then we are basically, from these, we're basically calculating price indicators. So the return today and return week. So when I took the snapshot last week, obviously Ethereum was at an all-time high and had just rallied 6% over a day and over 30% in the week. So since these are like short-term indicators, they're kind of mean reverting. So Ethereum was actually scoring negatively on those. I'm not saying that the sell-off was part of this, but obviously that indicator would have expected that. The next indicator that we're using is we're using a slightly different measure of market beta because we're looking at the market cap and volume. And kind of to balance that, the liquidity of tokens, whether they're traded and so on. Ethereum obviously is one of the largest tokens, so it's taking a large chunk of this beta exposure of 19%. Trend, Ethereum was at that time's point and also still, scoring or ranking very well on the trend signals over several time horizons. Also volatility, we measure volatility with an exponential weighted moving average model. If someone is interested, it's 150%, so obviously at least 10 times larger than your average stock. And that sounds high, but it's actually not very high compared to the other cryptocurrencies. So 150% is probably one of the lowest out there. Most of them actually have 200, 300% volatility. So just the recent sell-offs are obviously a sign of that. So it's going well there, or it's ranking there. And I'll explain a little bit more how these strategies work and how these ranks work and what that means. So we have news-driven models, so we're tracking all the different currencies on Reddit, Twitter, other social networks. We're kind of ranking them according to their news flow, and then we're measuring the news change, which is the most important for us. I'll again explain why that is. Ethereum wasn't scoring last week, wasn't scoring so well. It was actually 50% down in news, so there was a negative signal, and then we're tracking two different value measures. It's one, the network value to transaction volume, and the other is the network value to Metcalfe's law. They both measure how many transactions there are in these cryptocurrencies, and the other one is measuring how many addresses there are available and the transactions between those addresses. And I'll explain a little bit more how they work. So these yeah. So yeah, I mean, maybe you wonder, like, okay, how much are these indicators worth, right? So now it's kind of like my what I've been working on mostly for the last 10 years, and obviously you want to run back tests on these indicators and see whether they have kind of a positive influence. These two graphs actually show our benchmarks. Yeah? So it's great. So the green line is Bitcoin, and the yellow one is our beta strategy, so market cap and volume weighted. And you just invested in Bitcoin, so you made yourself, out of $1, you made yourself $17 last year, so fantastic. But if you would have kind of distributed a little bit with a, let's say, market cap and maybe volume weighted approach, you also would have made almost 35%, right? So twice as much. So obviously last year was the year where the altcoins kind of rallied and took off quite a bit of the market cap from Bitcoin. So they obviously outperformed that year. Now, what we are most excited about is that the other strategies are doing mostly a lot better. So trend being the best one, it's the blue line. It made you, if you followed the trend in those top 30 currencies every day, then you would have made 170x. So that's almost 10 times more than holding Bitcoins. Obviously, that strategy comes with a lot of work, right? Because you have to trade this strategy every single day. You have to follow 30 tokens, and you have to be trading 30 tokens. So there's a lot of work involved in that strategy. Value is another. This is all before costs. So I can show you later. Exactly, a lot is coming off. Yeah, but not as much as you think. I mean, it's like trading costs. You're paying bid ask, and obviously you're not like you're paying 10 basis points. You're trading roughly each token about every 2 weeks. So you're not doing, like even though you're looking at daily signals, you're not trading them that frequent. Take 10% off, roughly, like 10x off. Yeah, because I don't have site here, I can show you the net results basically that we would have traded, right? So again, this is past performance, no indicator of future performance, but this is just to give you an idea of the kind of strategies that we're looking at, and trend obviously being one of the largest hedge fund strategies of all, it's an obvious choice, right? And it's not a very complicated strategy, and I'll explain how it works. Value is another one. I just explained a little bit about the value indicators. So basically, in value, you sort all the different cryptocurrencies according to your value measure. So that's the network value divided by the transaction volume, for example. And then you're always buying the cheap cryptocurrencies, and you're selling the expensive ones, and you're looking at that every month. So every month you buy the cheap ones, sell the most expensive ones. And then you have news. News made you 27x. So it's, in normal markets that would be fantastic. In this market, that's not very surprising. News did have some very good signals, and over long periods, this seems to be working well. So let me explain the signal strategies a little bit. So the trend strategy, here I show an example of Bitcoin. So the idea behind the trend strategy is if the market is up over, let's say, 3 months, then you would buy the market, and you would be rolling that every day. And if the market is down, you would be stepping out of the market. So there are no short positions, right? In future markets that I was trading before, obviously you could take a short position. In Bitcoin, we don't assume that you can. And I think the liquidity is not there yet. But still, I mean, the idea is, so this chart shows that if Bitcoin made you 200%, which, in over 60 days, then this strategy, the momentum 60 days return would have been almost 200% as well. So that's great, right? So the market rallies, you're actually making almost the same amount of money. But now, if the market sells off, so the market sells off 50%, then this strategy kind of limits your downside. And on average, it's down to like 10%, but it's not going to limit it to 0, right? Because you're not going to step out of the market perfectly. yeah, that's pretty much the trend following strategy. Value strategies. So the second strategy I was talking about a little bit already was value. Value obviously is one of the largest strategy in the financial markets. So it's very interesting to kind of look, to see if there are value measures in crypto and to see whether these high valuations of cryptocurrency actually have any kind of fundamental reasoning behind it. And one measure that was proposed by Chris Beniski and Willy Woo is called the crypto PE ratio, although it has nothing to do with price earnings, but it's calculated as the network value divided by the transaction volume. So if you think about Bitcoin, for example, let's say the network value is 200 billion, and it's divided by the transaction volume, which let's say is 10 billion, then you would have a ratio of 20. It turns out 20 is pretty cheap. So if Bitcoin is trading at 20, you should be buying Bitcoin. That's at least the theory. This chart shows the PE, this crypto PE ratio over time since 2011. And besides the initial hype, let's say, and normalizing, this ratio seems to be kind of stabilizing around 50, let's say, right? So that means basically if Bitcoin is trading at 20, at a multiple of 20, it's cheap, you should be buying Bitcoin. And if it's trading at 100, it's expensive. So again, for this strategy, you're actually sorting all the different cryptocurrencies according to this measure, and then you're buying all the cheap ones, and you're not, you could be selling the most expensive ones, but again, short selling is quite difficult. So the final strategy is news strategy. So we're tapping into all the different social media networks and recording the mentions of every single currency. And what you see here is, again, Bitcoin, the price movement versus the news count. So in fact, the question, of course, is here, what's triggering what? So is the price up and therefore is there more news, or is there more news and therefore the price goes up, right? So again, this is the causal question. And the way to trade news is basically, obviously, if your news is higher, the relationship between news and price is relatively high, then of course, you want to be selling the currency. So again, and if it's low, then you'll be buying. And so you sort all the different cryptocurrencies according to their news level versus the price, and you're again buying those that seem to be undervalued in terms of news. So that's the only way to build your like a distributed portfolio. That's about the strategies. Find me later if you want to know more about it. So just quickly introduce our team. So we have Tom Kinishenko. He's running the ICO, pre-ICO investing. He's founded 2 crypto investment vehicles. He founded a long buy and hold fund in 2013 with me and Matthew as well, where we invested in Bitcoin and Ethereum. And then in 2016, he founded, again, Matthew and I advised the first asset manager and Bitcoin trust in Canada. And then he's also a 2x VC-backed tech founder. Matthew Shaw, he's responsible for strategy and derivatives. He's founded and exited an investment bank, and he managed billion-dollar books. And myself, I'm running data and trading. And my background is a machine learning PhD or computational neuroscience PhD. And I've worked for several hedge funds trading books over $1 billion as well. So like you already mentioned, we have 13 years of crypto investing. Again, in traditional finance, it's not very much, but we believe we've been around for a couple of years, and that should count for something. We have founded and exited 4 startups with proceeds over 500 million. And we've managed several funds with over $1 billion, and together maybe 2 billion of funds managed. If you want to know more about our fund, and then you want to find us at protosmanagement.com. If you want to know more about the whole data side and the data platform, that's on walter.ai. And you can always contact me directly at philipp@protosmanagement.com.
Thank you very much. Philipp Kallerhoff, he's using quantitative strategies. Thank you very much.